WTI is trading at $57 per barrel, which is off about 0.56% today, and the Brent is at $60.48 per barrel, which is a new milestone, getting back to pre-pandemic levels. I'd like to bring to the show my next guest this morning, Youssef Al-Shamari, CEO of CMarkits. Good morning, Youssef. Thank you so much for joining us.
Hello, Alexander. Thanks a lot for having me.
So, Youssef, today we saw Total's earnings results, which were not pretty positive. They certainly beat analyst estimates, but the profit, the full year profit, fell about 66%. And these are pretty much the results of all oil major giants. Do you expect a better 2021 since they managed to go through this very, very tumultuous and difficult year for the crude oil market?
Well, personally, I think markets-wise, when it comes to prices have performed much better than demand-wise. So ideally, they would work in the advantage of the performance of oil companies, of course. So I would expect them certainly to have much better performance in Q1 2021 compared with the results reported in the whole year of 2020. And that's due to two reasons. The first one is the prices are almost back to pre-crisis levels. And the demand is certainly much better than what we saw in 2020, especially in Q2, which got the hardest demand loss. But I don't expect them to achieve exactly the same performance as what we saw before the 2020. And that's because we still need to look at demand in here, and demand continues to be below the pre-crisis level by about 5 to 6%. So in that aspect, I would still expect that the performance will be not as it was in 2019.
On the other hand, we did see a great rally of the crude oil market in the past 2 months. What's behind these fluctuations, and which are the reasons for this major comeback?
Well, certainly it's the recent rally in crude oil prices was actually above than our forecast for the beginning of 2021. And here I would justify two important reasons. Number one, the unilateral cuts announced by the Kingdom of Saudi Arabia of making 1 million barrels voluntary cuts starting from this month. So in this month, they actually took effect. And of course, we have seen also excellent compliance coming from the whole OPEC Plus groups. The second also important reason is the approach taken by the Biden administration against Iran. So we've seen an announcement coming from the Biden administration on the day of the just a couple of days ago, when he said that the sanctions on Iran won't be lifted, and that of course kind of reduced the possibility of a U.S.-Iranian deal, also the Iranian deal which was signed in 2015 coming back again, and that would for the meantime keep perhaps Iranian supplies away from the market. So Iranian supplies before, by the way, during when the deal was signed, was something like 4 million barrels. So currently they are below 4 million by about 2 million barrels, so 50% less. And that certainly is pushing prices up. So basically, of course, looking at also the vaccinations rate around the world. So suppliers, traders are expecting the markets to be in shortage, taking into account a demand recovery coming up into 2021 and cuts coming from OPEC Plus, and of course the unilateral cuts coming from Saudi Arabia. The third important factor in here is look at what's happening in the US. Stocks are coming down and the production is not coming up, and this is also what's also pushing prices up. In the past, we used to see whenever prices go up, there is an incremental rise in the US oil production, and this is not happening now, and that's due of course many shale oil companies have filed for bankruptcies. The number of oil rigs in the US continue to be 50% below 2019 levels. And that's why traders are not expecting much production to come from the U.S.
As you said, we do see more demand than supply at this point. So do you think this trend is going to continue through 2021?
I don't think we still have seen demand coming back yet, but it's expected that demand will be higher than supplies, perhaps in Q2, Q3, and this year. But I think here it will depend on how OPEC will deal with that. So at the current production agreements from OPEC, perhaps any shortages in supply will lead to further decrease in the stocks. And that could, in my view, would keep prices between 60, 65 levels. But certainly, I don't expect prices to go like to something $80 or above, even if as OPEC Plus keeps its production. Yet, I do think that if stocks come back to normal level, then we could see the more easing approach coming from OPEC Plus. So I think they would continue to release more supplies to the markets in order to keep prices balanced.
All right, thank you very much. Youssef Al-Shamari, CEO of CMarkits. Thank you for joining us. Have a great day.
Thanks a lot. Thanks for having me.
So I just want to bring you the